friends, welcome to RV Academy. Well, in section C, I did one problem, that is 7th problem, computation of book profit and tax liability, which already we completed now. We see the next one, problem number 8. Bharat imports by air from USA a machine along with relevant accessories and spares for the value US $1,20,000. Free on board. The other details are as follows. Commission to local agents in India 27,000. Freight and insurance from airport to factory godown 30,000. Freight US dollars 36,000 US to India. Goods are insured. Premium amount is not shown in invoice and not available. At the request of Bharat, US $6,000 has been incurred as expenses for improving the design of the machine, but the same is not reflected in the invoice. Basic customs duty is 15%, education says 3% and IGST 18%. Exchange rate to be considered US $1 is equals to 72. This is one of the easiest concept, computation of customs duty and IGST. Total customs duty and IGST is the amount of tax payable to government. Now I will tell you how to calculate the value for the tax purpose. Whatever is given in dollars, you kindly take those values. Free on board for machinery $1,20,000. This is in dollars. You take that. And freight charges US to so it is given here. Freight and insurance US to India is $36,000. Remember, we have to take only 20% on the free on board for FOB. FOB 1,20,000 into 20% comes to 24,000. 24,000 or 36,000, whichever is least. So the least is 24,000, so that I have taken that 24,000. I have not taken 36,000. So 20% on FOB is allowed. So 20% comes to 24,000. In case if this is more than the value of freight paid, then you take the actual value 24,000 and 36,000 is given in the problem. So whichever is least is considered. 24,000 is least, so I have taken 24,000. Insurance, if it is not known, 1.125% is the standard rate on the FOB. 1,20,000 into 1.125%, it comes to $1,350. On FOB, 1.125% is the standard when the insurance is not given in the problem. Design and development charges paid $6,000. So all these are paid in the form of dollars. Totally $1,51,350. We convert this into rupees. $1 is equals to 72 rupees. So that means 1,51,350 into 72 divided by $1. So it comes to 1,08,97,200 is the total value. Plus commission to local agents paid in the form of rupees, that is in the first part. Commission to local agents in India 27,000 rupees. So total CIF value 1,09,24,200 plus 1% loading and unloading not applicable to this product. So assessable value comes to same 1,09,24,200. On this, customs duty is given at the rate of 15%. So customs duty on 1,09,24,200, it comes to 16,38,630. Surcharges at 10% on this 16,38,630. 10% surcharge is added. So total value now for the purpose of IGST comes to 1,27,26,693. On this value 1,27,26,693, 18% IGST is calculated. that comes to 22,90,804.70. So now the total tax and customs duty, I have taken only this part, 16,38,630 plus 1,63,863 plus 22,90,804. These three parts were added. It comes to 40,93,297.70. That is the total customs duty and IGST payable. This is how we have to compute when the problem is given. It is quite easy. We will see the next problem now. Well, see the next problem. A, B and C are the partners sharing profits and losses equally in the firm. During the year 2017-18, the firm incurred a net loss of rupees 6 lakhs after deducting the following: commission to A 40,000, bonus to B and C 80,000 each, salary to A, B and C 1,60,000 each, donation to PM National Relief Fund 80,000, income tax 40,000, sales tax 1 lakh, office rent 1 lakh, depreciation on assets 4 lakhs, allowable depreciation as per IT law 4,80,000. Interest on capital calculated at 20%, 64,000, 56,000, 72,000. The profit and loss account also include the following incomes: long-term capital gain 90,000, short-term capital gain 70,000, export earnings 3,80,000. Compute the book profit of the firm and its taxable income for the assessment year 2018 and 19. First I will calculate the book profit. There is a net loss. Net loss of 6 lakhs is given. Add inadmissible expenses, provisions, reserves, donations, charities, any payment made to partners in the form of salary, bonus, commission, etc. All these are inadmissibles. So here first thing, commission to A is given. Commission to A, one of the partner, 40,000. Bonus to B and C at the rate of 80,000 for each partner, 80,000 into 2, 1,60,000. Salary to A, B and C, all the three partners, 1,60,000 into 3 comes to 4,80,000. Donation to National Defence Fund is inadmissible expenditure 80. Sales tax is given. Except sales tax, all other taxes are inadmissible. Sales tax or GST is admissible, so don't take it. Income tax is inadmissible 40. Depreciation charged by the business is 4 lakhs, but actually allowed is 4,80,000. First instance I will add depreciation, whatever is charged by the business 4 lakhs. Interest on capital is allowed up to 12%. In excess of that is taxable. Interest on capital in excess of 12%. That means here they charge 20%. So 8% extra is charged. So 64, 56, 72 total into 8 by 20, it comes to 76,800 paid in excess of 12%. That is 76,800 totally. When you add all the inadmissible expenses, it comes to 12,76,800. 12,76,800 minus 6 lakhs, because it is a loss, you get 6,76,800. And apart from that, they have also said the profit and loss account also include the following income: long-term capital gain 90,000, short-term capital gain 70,000, export earnings 3,80,000. So when you add all this, long-term capital gain, short-term capital gain, export earnings, all these are the incomes not chargeable under the head business. It is separately calculated in the total income. Plus allowable depreciation 4,80,000. In the first instance I added 4 lakh charged by the business. Actual depreciation allowed as per the provision is 4,80,000. When you add all this, it comes to 10,20,000. So 10,20,000 is the total income minus 6,76,800. Again we get 3,43,200 book profit minus value 3,43,200. Now remuneration. When there is a loss, maximum remuneration should be taken as 1,50,000. So remuneration maximum 1,50,000. In case book profit is more, suppose this is 3,43,200 is a profit, then 90% of first 3 lakh book profit or 1,50,000, whichever is higher. But here we have a loss, So that 1,50,000 maximum remuneration. Actual remuneration is 6,80,000. That I have taken all these three: commission, bonus, salary. All put together it comes to 6,80,000. Among these two, whichever is least, 1,50,000 is least, is allowed. So that means 3,43,200 plus 1,50,000. Total loss from business is 4,93,200. The first part is calculated. Total income I am going to calculate now. Well, I will calculate the gross total income and taxable income. Income from capital gains, LTCG and STCG. Long-term capital gain and short-term capital gain, 90,000 and 70,000. Export earnings comes under income from other sources, 3,80,000. Total income comes to 5,40,000. Minus loss from business, 4,93,200. The gross total income comes to 46,800. Minus deductions under section 80G, donation to Prime Minister's National Relief Fund is given 80,000. So the taxable income becomes nil because donation is more than the income, so that the taxable income becomes nil. This is one kind of a problem which is expected for 14 marks. One more problem is there that I will work out in my next video. Thank you. Some of the book I published for BCom and BBA of BCU and BO for Skyward and Sapna Book House. Please make use of it.